Hi friends, once again welcome back to Rochi's Share Tips. In today's video, we are looking at the share analysis of Goodyear India Limited. The reason why we are doing the share analysis right now is recently this company has paid off all its debts. The company has become debt free very recently. And not just that, the company is paying very high dividend in last 2 years. That is the reason why we have decided to do the share analysis, because maybe in the coming years this company may register a very positive growth in terms of profit margin, in terms of share price growth. If you look at the business model, it is manufacturing of tires and tubes, and this business has a decent growth potential. Now this Goodyear India Limited company is the 6th largest in this sector in India. If you look at the market cap is at 2316 crores, showing it is a small cap stock. The current market price is at 1003 rupees, which is 24.6% discounted price from its all-time high of 1331, happened on 2021 July this year. If you look at the book value, it is 294, which is 29.4% of the share price. The company became debt free very recently. Face value of the stock is just 10 rupees, which means a stock split is possible in another 2 years. Dividend yield is 9.76, which is the most attractive part of this company, because the company gives around 976 rupees returns per year for every 10,000 rupees invested. Bonus history shows that company has issued 3 bonuses in the past, and the last issue happened in 1991 at the ratio 1:1, showing that a probability of getting bonus is very rare. 12-month returns is at 22.29%, which is good. 5-year returns at 133%, which is okay, just okay. Maximum returns at 13 years is at 482%, which is just okay, average. Inventory turnover is 8.72, which is very good. Pledge percentage is 0.00, showing that company hasn't pledged any of its shares. Now the earnings per share is 5.9, which is very high, showing 5.9% of the stock price. ROE is 15.5, ROCE is 20.9, ROA is 10.1, which is very good or okay, above average. Debt to equity is 0.02, which is very good. Debt to profit is 0.12, which is very good. This is another most attractive part of this company, because company has become virtually debt free, and that happened at very recently. Promoter holding is 74.00, shows that promoter has very high confidence in this company, and they almost hold more than 2/3 of the company's shares. The share of DII and FII is 7.44 and 0.77% respectively, means that company is attractive for investors, even though they haven't invested much larger amount, but at least it is attractive for investors. Stock P is 14.6 against an industry average of 15.5, shows that company is fairly valued and slightly undervalued. It is not at all overvalued. Consistent and steadily growing profit in last 12 years shows your investment is absolutely safe in this company. Reserves of the company is 816 crores, which was decreased from the previous year figure of 893 in the 2020 March. Now this is somewhat concerning for us. The company's reserves is shrinking, but still, even after that shrink, company has sufficient reserves to handle all kind of economic shocks. The cash flow is found positive, and we can see a consolidation of debt as well, which is very good. Chairman and managing director of this company is Mr. Sandeep Mahajan, age 56, and he got a bachelor degree in mechanical engineering. He got diploma in management from IIM Bangalore, and he got 30-year experience in industry, which means company is handled by highly experienced and professional person. Hence, Goodyear is an American multinational company. It don't have a CEO in India. It only have a chairman and managing director. Goodyear India has manufacturing plants located in Ballabgarh, Haryana, and Aurangabad, which is in Maharashtra. The company has no subsidiaries as per the annual report PDF page 32. But Goodyear parent company has many subsidiaries because it is an international brand. Organization is headquartered in Faridabad, Haryana, but the corporate office is in Delhi. Remuneration paid to the top 3 directors is less than 5.5 crores as per the annual report PDF page 90, showing that roughly 4.5% of the profit is taken as director salary, which is okay. Now if you go to annual report PDF page 32, you can see the subsidiaries and joint ventures and associates, shows that company does not have any subsidiary, joint venture or associate company. Now if you go to page number 60 PDF in annual report, you can see the salary of directors, and you can see Rajiv Anand, whole-time director, Sandeep Mahajan, Mitesh Mittal, whole-time director. These three people taking the maximum salary. Now this Goodyear India company was founded in the year 1922, showing 99 years of existence, which means the company is firmly established in the Indian market. If you look at the recent financial results, quarter 2 2021 showing a net profit of 39 crores. If the previous quarter Q1 2021 showing a net profit of 27 crores. Now if you look at the previous year same quarter, it was 49 crores, which means quarter to quarter there is an increase of 44%, which is very good, but year on year there is a decline of 20%, which is not very good. So which means the results are neutral, there is nothing positive, nothing negative, it is a balanced result. This year 2 dividends has been issued, altogether 98 rupees has been distributed, and the last issue of 18 rupees happened on 4th of November, and no more dividend is expected this year. Let's go to the technical part. If you look at the 200 exponential moving average, it is in line with the price. It is neither above nor below, it is on par. If you look at the 48 and 13 moving average, you can see a negative bearish crossover, but it is also getting flatter. Now if you look at MACD, you can see a negative value, but it is also getting flatter. Now if you look at stochastics, you can see it is bearish, but not very strongly, but it is bearish at least. RSI index is perfectly neutral. Based on the technical indicators, what I understand is price is currently in a strong consolidation phase, and this consolidation may continue for a few days or maybe weeks. We cannot say exactly, but only from the long term perspective, if the price is falling slightly further, that will be a good entry for long term. So the same thing is mentioned here as well. 200 exponential moving average is neutral, 13 exponential moving average and 48 exponential moving average is also neutral and slightly bearish as well. The current price is okay for long term perspective. The MACD is negative and showing a neutral trend. Hence, quarter 2 financial results came in neutral way. It is impossible to predict the short term trend. Stochastics looks bearish and in the neutral zone. RSI index is also in the neutral zone and not giving any clear hints. Based on the technical indicators, price is clearly going for a short term correction and consolidation. And the breakup comes like this: 0% bullish, 25% bearish, 75% neutral. That's what we see. Follow buy on dip strategy for long term. Support can be found at 980, 955, 920 and 880 levels. Any price around or below 980 will be a fair entry. Opportunities only for long term. Between 930 and 960 will be the much better entry. Maximum long term portfolio allocation is 1%. Buy 0 to 1 quantity for a portfolio size of 1 lakh. Immediate target and medium term target will be not applicable. The long term target is 1331. If you found our video useful, please like this video and subscribe to our channel. Thank you for watching.